right, we're live, guys. Today's topic: what goes on in the mind of a successful trader? What needs to be happening up here in order for you to actually be profitable? More on that after this. Okay, so on the show on Trader's Mindset, I'm joined by my co-host Libs. Hello, Libs.
What's up, guys? Very excited about today's show. Mindset of a trader, that's probably the most important part about trading. The psychological part about trading. So very interesting discussion we're gonna have today.
All right, and we're joined by Dirk Hartig from PrimeXBT. Hello there, Dirk.
Hey, how are you doing, guys? Happy to be with you today, and hope, I can shed some light maybe on those things that are going on in your head up there, when you enter trade and things are running for you or against you.
Right. So before we start, for those maybe who don't know who you are, maybe you could introduce yourself a little bit, Dirk. What do you do there at PrimeXBT, and a little bit about your background, how you got into trading, your experience?
Sure, yeah, and so I have to go a long way back, actually. So I've been a trader for 20 plus years already now. Started my career in 1998, and I was a stock trader. Later, I progressed into Forex. Currently, I'm focusing on Forex options, and since early 2017, also on the crypto markets, primarily Bitcoin and Ethereum. Have been trading a lot throughout my career for institutional investors such as banks and rich individuals or family offices. And since 2019, I'm trading my own book. And I've been approached by PrimeXBT earlier this year because I've been their client also for quite some time now already. And they basically asked me, hey, can you maybe share some of your insights with our clients to make the progression from from being a losing trader, so to say, to a winning trader, so they don't step into the same traps that all of us that start trading tend to step. And we built up a channel called the PrimeXBT Trading Academy, which you can also find on YouTube, where I share my insights about trading and explain my positioning 3 times a week.
Right. So you're not an experienced trader, right? So 20 years of experience there.
Yeah, quite some time, yeah.
Yeah, I thought I was trading for long. I've been in the market for 5 years, but I mean, over 20. That's awesome. I'm really excited to hear what you have to say about because you obviously have a lot of experience and you've been doing this for such a long time, and I think it's going to be a great episode here today.
Yeah, I mean, 5 years is already a long time too, in my opinion, because technology has progressed so much. So you cannot really compare nowadays trading with what you were doing 20 years ago, when we were throwing weird signs on the stock trading floor to each other.
That's a huge difference.
I'm kind of curious. So with your experience, right? I've only ever traded with crypto, right? So
okay,
is it a different? Really, does it take a different kind of trader to be successful in crypto? You have different skills?
Not really. Being a trader is always, you are looking for asymmetry of a market. So you're looking for something where the market is off, whatever that might be price correlated or correlated to another asset. There millions of possibilities, literally. And I think the difference when we look at trading cryptocurrencies over classic assets, and me, I'm always comparing, especially to the currency market. So let's compare to euro dollar, for example, is that cryptocurrencies are still a quite young market. Not so much actually in terms of volume, of daily trading volume, but in terms of finding trading setups every day. So usually in my intraday trading activity, I might find something between 5 and 20 setups every day, whereas in euro dollar for intra trading activity, I find 1 or 2 setups, because you have so many institutional investors trading the currency markets, and you don't have that on cryptocurrencies at the moment, which is probably something that's going to change over the course of the next 4 to 8 years.
Yeah, that's interesting because you obviously started in the legacy markets and then went into crypto, right? And I started in crypto and slowly but surely made my way into the forex markets. And it's interesting to note that I'm basically trading exactly the same way. And the key for me was consistency and that trader's mindset. That's it. You know what I mean? Like, just have your system, follow your system, and as long as you are consistent and actually do what the system tells you to do, you can trade any markets. I mean, it's market structure, it's price action, right? So I do think that it's very possible for a good trader to really diversify in what markets you can trade.
Absolutely agree with that. And, if you found a system for yourself that works in any type of market, be it currencies, or I think you call it legacy markets just now, so forex, stocks, bonds, precious metals, you name it, you are like ahead probably of 98% of the crowd already. Because this is what it's all about, finding something that works on every asset really by the end of the day. Yeah, I absolutely agree with that.
Yeah.
Okay, so you guys are saying it's a good trader can trade in all markets, right? So both you, Libs, and you, Dirk, right? Can you elaborate what exactly makes a good, quote unquote, good trader?
Yeah, that's a good question, and of course, every answer I'm giving here is highly individual. Now, I can only elaborate what made me personally a good trader, and I personally became a good trader when I realized actually two things. First of all, when I realized that I don't need to be emotionally attached to my trading positions. And I think everybody that has been trading out there of our audience knows that you enter a trade, the trade goes into your direction, you have those adrenaline pumping into your veins, you feel euphoric, you feel like, especially if it happens like 4, 5, 6 times in a row, you feel like the king of the world or the queen of the world, like you've cracked the market, and then suddenly the trade goes against you and you feel like, you don't know your ABCs anymore, and you're going to, you're not a good trader. And I think it's important, first lesson, to learn to detach yourself emotionally from your trade. And you do so by having a game plan, in my opinion. And this is, by the way, also something that differentiates the everyday, the so-called retail trader, although I don't like that word. So everybody that's trading from home, from an institutional trader that's trading, for example, for a hedge fund or bank. Those institutional traders, of course, they have more capital. We don't need to discuss about that. But they always enter a trade with a game plan. So they say like, okay, I'm entering this trade. I'm going, for example, long now Bitcoin because of this. Of that reason, I'm going to exit the trade at this point. I'm going to, with a profit, I'm going to exit the trade at this point with a loss. And by the way, my profit is always going to be at least twice the amount my loss is going to be. And then they just enter the trade and they, let nature takes its course. This is something you rarely see with traders that trade from home, especially beginner traders. Usually they stare at the 1 minute charts. Every bump up and down gives them the emotional roller coaster. And when they go home at night, they are totally exhausted emotionally and physically. And this is something you can only do that long. Sooner or later, it's going to get to you. You're going to die of a heart attack. You're maybe going to destroy your relationship. You're going to get your divorce. I'm exaggerating now a little bit, I know. But what I really want to emphasize with this is that you have your game plan ready, and it makes it much easier for yourself to detach yourself emotionally, and especially not to take it personally if you have a losing trade. It's not something personal. It's not because you lost because you're a bad person or you're not a good trader. Losing is part of a game. And every professional trader out there long term probably has not a winning rate, a win ratio that is better than 70%. If you're at 70% or maybe slightly above long term, I'm talking about thousands of trades, years of track record now, you are amongst the top 5% of traders out there. And this is where the second part, my second answer to that question comes in. It's math. Really, it sounds boring, but sadly, it's part of the whole equation. And by math, I mean something like risk-reward ratio. If you aim to earn twice as much as you're risking per trade, you can earn a super comfortable position where you just need to be correct like 42% of the time to not lose money. And this is like better than coin flip already.
I think you touched upon pretty much everything here. I think. Well, I think the bottom line is like, what is a good trader? Well, a good trader is a profitable trader. Like there's so many different systems out there, and you have to understand also. I think that you said something important here, that new traders are they're watching the lower time frames, right? And they get lost in the crazy volatility of the 1 minute and the 5 minute, and that will, you also mentioned that how that can affect your personal life, right? And that's a massive reason for that I'm not scalping anymore. So I'm not day trading much. I'm not scalping because it kind of took over my life. I remember, entering a trade in the morning, then constantly checking that trade, even when I'm not in the, in the office, right? So I think it's also very important that you understand what works for you. You develop a system and a strategy that fits your lifestyle and personality to get that work-life balance, because trading is not a work, it's a lifestyle. So you have to, because I'm working from home, I have my office here. It's very easy for me to be to make trading take over my whole life. So it's important to understand, like, where does trading fit into my lifestyle, and I think that is a very important part about becoming a successful and profitable trader. And then of course you have all the stuff like trade like a casino. You mentioned it's a numbers game, and in there you have the risk management aspect, right? But really I do think that you pretty much touched upon on most of the important stuff here. And what you said about the fact that if you have over 70% win rate, like you're a legend, right? If you have a long-term win rate of 70%, you're up there, right? I know a lot of professional traders who have around 50%, but because of the fact that they're taking high risk to reward trades, they're making a lot of money with actually, some even have lower than 50%. So they're actually losing more trades than they're winning, but they're still making money long term, So that's like realistic expectations, right? I think that is super important.
Yeah, and I mean, imagine if you're a beginner, what having 50% or lower than 50% win rate does to you mentally. That means you are probably sooner than later going to have stretches such as where you lose 5, 6, 7, 8, or 10 trades in a row. And I mean, you're going to go broke anyway if you risk like 10 or 20 or 50% per trade. But even if you risk something like 1%, it's going to have a huge psychological impact on you. And this is, you have to treat like every trade like a business. Forget about what happened before that. Concentrate on what happens with your trade right now. Have your game plan ready, and then you can go about it. And it's very funny, by the way, that you mentioned earlier that you are trading from home. For example, for me, I rented an office outside of my home where I go every day to trade. Because for me, when I'm at home, I'm so involved with things at home. I want to spend time with my family, and I noticed for myself that I'm a worse trader when I'm trading from home, even though it's more comfortable. So I went through the actions of renting an office outside of my home, and if I'm there, I'm working there. I'm focused on my trading, and nothing else matters. If I leave the office, I'm the Dirk that is there for his family again.
I thought about that. I really have thought a lot about that, having an office. But like I do really, like it kind of goes back to what I was saying, right? It works for me, you know, and I do like I do like the fact that I have my family here, because it's like some days I wish I would be in an office, obviously, because you have kids running around. Like I have one 10-year-old and then I have one 4-year-old, and it's, you know, trying to focus on managing a trade while having them trying to kill each other. Obviously, that's not the best type of scenario to be a trader in, but the positive definitely outweighs the negative. But then again, it's going to be so different. Like we're all individuals, and we have to, like you say, find that balance. And if that is, you know, getting an office, then do that, you know. If you find that you're better traded doing that, then absolutely, you know, you should go for that.
How's that with you, Crypto Penguin? You're trading from home, or did you rent an office?
I trade from home as well. I actually prefer being able to, but I don't have kids, so actually I kind of want to know, you know, for those of you, the dibs, right? And I don't know, Dirk, if you have kids.
I do have. I have a 3-year-old daughter who's running around at home all the time, of course.
So I'm curious then, right? I often watch these shows and they always talk about, oh yeah, you should trade like this, you should trade like that, but nobody mentions, you know, hey, how do you trade if, you know, your kid's crying at 2 a.m. in the morning and you're running low on sleep, and this is something, you know, if you want a family, right, and you also want to get ahead with your trades, how do you manage that, and how do you not let that like, you know, like maybe your spouse is like, you know, saying, hey, why do you have 10 losing trades in a row? You're so used to get a real job. Right?
Oh, Jesus.
That affects your mindset, right? That affects your mindset.
Yeah.
So
well, you don't show
that?
her your journal, right? You don't share your trading journal with your partner, because she's going to be like, hey, what's going on here? You're losing quite a few trades.
And believe me, if you have a newborn at home, so let's say the first 0 to 6 months, maybe you don't want to trade, you know, and you want to focus on your family really there, because as you just said, you're going to have that lack of sleep, and lack of sleep is not going to enhance your trading. That's the same like trading drunk, which also is not a good idea.
Absolutely, I think that's a great point. I started trading when like right before my youngest was born, and I obviously didn't trade actively during that time, because you know, you don't have the time anyway. So it's like, but I think what it comes down to is planning, having a trading plan and a trade plan. So an overview trading plan of what do you want to do with the trading, when do you want to trade, how are you going to trade, what times are you going to be able to trade, are you going to be able to have daycare when trading, right? And if you're trading professionally, obviously you're going to be able to, you know, have daycare while trading. But then if you have a job on the side and you come home at like 6 in the evening, and you got to take care of the family. And then you have to like be realistic and say, maybe I can only trade 1 hour a day. So what type of system, what type of trading style can I manage to trade with 1 hour a day? And you know, I would look towards the, you know, swing trading on the daily, the 4 hour, and base your system on specific times of the day. You know, let's say you're going to be able to trade between 8 and 9, or 9 and 10 in the evening, and you know, have alerts set and make plans and do very careful planning during that time. So when the alerts go off, you know exactly what to do, when to do it. So the actual time at your desktop has to be minimal, because all you do when the alert goes off, you know what to do. You enter orders. You let the trade, you know, do its thing.
Or maybe you have your orders already preset. I mean,
yeah,
which also is possible. I super much agree, and I think this is something everybody can do. And let's look at the status quo here. What you have to beat, as a trader, doesn't matter if you're a full-time or part-time trader, always is the risk-free revenue you can get. And the risk-free revenue, at least for us Europeans, but it's pretty much the same almost everywhere in the world at the moment is that you have 0 interest rate, or maybe even you have a negative interest rate. So my bank is charging me interest rate if I deposit too much money with them, which is something, that it's unheard of. I never experienced that in my life before. And so this is what you have to beat.
Wait, I'm sorry. Could you repeat that? I thought you said your bank charges you money for giving them too much money?
It's like my bank charges me when I deposit more than 25,000 euro with them. They charge me interest rate for that, because in Europe we have an interest rate of 0% deposit facility actually with the ECB that is negative at the moment. And of course, you end up as the consumer paying that by the end of the day. So you not only, and this is the craziness of this time, gentlemen, you not only have a 0% interest rate or something where you are charged if you have money deposited with your bank, you also have a high inflation rate. I mean, we're talking about 6.4% inflation in the USA. We're talking about 4.4% inflation in Europe. And this is just for consumer prices. This is not even taking energy into account, which is rising by 20% a year at the moment. So this is what you have to beat as a trader. And I think you can do that actually. So let's say you have to beat something like 4 or 5%, at least, to earn a little bit of money or to retain the buying power of your money. And you can do so. And you cannot do so as a beginner by trading 1-minute charts or 5-minute charts and scalping up and down, because this is like you are starting to play tennis and want to play against Roger Federer or Novak Djokovic. But you start with the daily charts. You start so very, very easy by identifying what is the sentiment at the moment. And for cryptocurrencies, we have so great tools out there, something like the Fear and Greed Index, where every day you can see what is the sentiment for cryptocurrencies at the moment. Is the sentiment positive at greed, but not at extreme greed levels? Well, maybe then you try to only choose long trades. Is it in a fear sentiment? Maybe you only try to choose fear trades. And you look at your daily chart of, for example, Bitcoin, and you identify where are areas of resistance and support at the moment, and then you place your limit orders accordingly. And you are be very selective in the beginning. If you're unsure what to do in the morning when you're analyzing this, and this only takes you with a little bit of practice, like 20 minutes, well, then you don't enter a trade. Because remember, you only need to earn 5% to beat the system at the moment. And yeah, it's easy. If you do that and you have like 10 or 20 trades a year, I'm very, very sure you're already going to be successful. And then you can build up from that, of course, in your trading.
I want to note something there, because I think this is very important. You said being selective and we're talking about quite a few percentages here, but that also goes into the realistic expectations of what you can expect in the market. And I always try to say that in the beginning, your goal should be to be profitable, not aim at a couple of percentage. Be profitable. And when you are consistently seeing that your portfolio goes up in value from month to month, you can start looking at, I'd like to say, somewhere between 2 and 5%. And when you get really good, 5, perhaps 10%. That's like really nice, And being selective with your trades is so important, because, if we can quickly talk about, risk to reward ratio, if you risk 1% on a setup, right? You risk 1% on a setup, it's a 3R winner, you make 3%, right? If your goal is 5%, you need 2 to reach that and get above that. You need 2 trades a month, 2 winners a month with 3R ratio, right? So be selective, and with that, you can see that you don't have to trade all the time on the lower time frames to make 10 trades a day. You can take 1 to 5 trades a month and make that type of money. And that is the beauty of trading the higher time frames, where you have time. You can watch price approaching a level, and it's going to take hours and hours and hours for price to hit that level. So if you're at work and you get an alert, you know that, well, I'm home in 4 hours, and price is most likely not going to hit that level in 4 hours. So I have time to get home and prepare the trade and all that stuff. And if that's a winner, it's you're very close to your goal already. So I think like less trades is better. Less trades of high quality, much better when it comes to swing trading and starting out your trading career. And because we all know this, over trading is I would like to say over trading is probably the number one cause that most people are failing in this market, because they think they have to trade a lot to make a lot of money, which when you look at the statistics, most professional traders take way less trades than you think.
Yeah, absolutely. I mean, I couldn't put it better, honestly speaking. It's the number one cause, because you always have to go through the spread. So with every trade you open, you start out with a loss automatically, no matter how tight the spread might be or how low your commission might be. It always starts with a loss. And by being selective in the beginning is exactly, you just need those 1 or 2 or 3 trades with a good risk reward ratio, to beat 95% of the people out there. But I mean, I understand that people want action, of course, if you're trading, it's attractive to have this click game out there. I understand that. So what I always suggest, if you have the time to do scalping, well, then go and do it, but don't do it with 100% of your portfolio. Do it like with 5% of your portfolio. So if you have, I don't know, 10K available for trading action, do it with 500 US dollars or euros, and to satisfy, the gambler inside of you. I totally get that. It's fun, it's attractive, it's a bit like playing slot machines by the end of the day.
I'm curious, like, have you ever felt that? Because, like, I hear a lot that people, the professional traders, talk about how trading should be boring, right? And I remember, like, I think it was like 6 months ago, I had one of my most profitable weeks in my career, and I felt like the week after, everything went well. I was profitable. I was not losing money, but it felt, I didn't really like how it felt. I started asking myself, like, I think it's getting boring. And am I really supposed to be doing this? It's trading really for me, And then it kind of clicked. I'm like, wow, it's actually getting boring, and I'm profitable, and I've never been this profitable before. So what's your comment on that? Like, have you felt the same? Like, you get to a point where you're just following whatever system you have, and going, taking one step ahead, like almost like a robot, right?
Yeah, if you've reached that point, congratulations. This is a really important point. One of my mentors that influenced me a lot when I was starting my trading career, and when I ran my first books, for example, for banks as a prop trader, I was losing money because I was too impatient, because I thought like trading means constantly being in and out of the market, always going through the spread and so on and so forth. And this guy told me, Dirk, if you're not bored 75% of the day as a trader, you're doing something wrong. So exactly like you said right now. But and this is difficult, by the way. Being bored is something our brain doesn't like, our psyche doesn't like. Our psyche wants action, wants to be entertained. And so being bored is against the nature of a human being. It's something you need to overcome. And then especially making the transition to those 25% where you need to be aware, where you need to be in the market, where you need to take action. So going from 0 to 100 then is very, very difficult, in my opinion. But this is something, everybody has to go through. And that's why I say, if you feel bored, okay, take a little bit of money and try to scalp, to kind of keep your brain entertained, to trick you into that you're actually doing something, and that you don't feel like, oh, I'm actually not doing something here, but I'm still earning money. What a life.
Yeah, I know a lot of people. I know a lot of people do that, and it works really well to kind of satisfy that need for action and that kind of gambler's mindset, and it works really well. For me, however, that just doesn't work. I found that the best thing for me is to leave the office, do something else. Let the alerts do their job or something like that, and just wait for the alerts, like go work out or play with the kids or something like that, right? But then all when the alerts goes off, that it's now's the time to do something, right? So it's taking me many years to become friends with boredom and the I'd like to call it like the art of waiting, right? Just sitting around and waiting. I think that is really important.
Yeah, and maybe I want to share a story what can actually happen if you don't have that patient. And this is something that happened in 2015 to me, where we had a market in terms of currency movement that was very flat. I was trading options. I don't want to go too much into detail now how that whole thing worked. I was the seller of the option, getting a premium for this because the volatility was so low. I kept on selling because I thought like, I need to make my 3 to 5%. And then I ended up one day we had a volatility spike in euro dollar, and because I was bored and I did so much that I shouldn't have done, I did all those trades because of boredom. I ended up losing 100,000 US dollars in just one day.
Wow.
In just a time frame of 2 hours. So I'm telling this because, first of all, I want the audience out there to know that no matter how much experience you have to be careful not to go into the same traps again. So you never can be on the secure side.
Yeah, and when you lose focus, and it kind of goes back to what you said, like lack of sleep, how that's like trading while being drunk. Like you have things you need to look at. Like I made. Luckily, it wasn't a huge position, but I made some bad mistakes. I remember being up all night. My son was kept me up, and I was getting to the office in the morning. I saw the setup, everything looks perfect, and I added an extra 0 to the position size. So, and that's just such a stupid mistake, right? Like
I could tell you stories about accidentally adding zeros as an institutional trader to position sizes, but I don't want to scare
and what happens is, like, if you add an extra 0, that's 10 times the risk. So I went from 1% to 10%. Luckily, I noticed this while being in profit, so I actually made some money on that. But could you have imagined if I lost that trade? I'm like, wow, I lost 10% of my portfolio because of lack of sleep. It's like those small things. Like, it's really, you need to be laser focused. Really,
it's scary. It's like like 1 or 5 seconds where you are not totally focused, where you kind of do repetitive things like punching in numbers, and then suddenly you destroy like 3, 6, or maybe even a year of work with that. Yeah. I don't think there's any other profession out there where something like this probably can happen. Well, maybe if you're working in construction,
Well, you got buildings, they're worth a lot of money. Yeah. But yeah, I know what I mean. That's dangerous.
So when we talk about making mistakes, right? I feel like for me personally, I didn't become a real trader until I really screwed up the first time. Like, all these things we're talking about, I kind of like heard other people say, and maybe this is you, audience, right? You're hearing us telling us, and you're like, yeah, that's for you, but I'm good. I know what I'm doing. So when I first started out in 2017, I was like, oh, market's going up. I'm making money easy, right? Yeah. Maybe that's for you guys. You like old farts in the stock markets, whatever. But this is crypto, man. This is different. I know what you don't know. And then it took, getting totally wrecked on Bitcoin Cash. That one time I lost, like, I think it was like 20,000 or something, which was a lot of money for me back then. And then I took a couple of days to like try not to kill myself. And then after I came back from that and I re-entered the market, I re-entered it with like that was always in the back of my mind. I was like, that can happen at any time if you don't trade responsibly. Do you think everyone has to go through that though? That kind of like trial by fire, or can you avoid that?
To a certain extent. I mean, this is one of the things we want to try to avoid with the PrimeXBT Training Academy. That you don't have to go at least through the experience of I lost so much money that I'm going to quote that I'm thinking of killing myself. You probably were joking. I hope so, at least about that one back then. But I understand, and this is like a notion or an emotion that you go through. Then I remember when I had this loss of 100K, I was like, I went out at night. I got drunk, insanely drunk. That was like my kind of compensation to try to deal with a situation like this. But the important thing is, and this is what you did there, is that you go back. And more importantly, that you learn from your mistakes. And it's hard. It's super, super hard to admit towards yourself that you were wrong, that you, pardon my English audience, that you fucked up. This is the hardest thing there, to say, yeah, that was my mistake. We always like to accuse other peoples of our own misery. And this is something as a trader that will, jump into your face sooner or later. Yeah, my position was bad because the market was wrong. This is where all the drama always starts, when you say the market was wrong. And and so, yeah, go back, start again. Maybe something that can help you, if you're the type of person, is, for example, keeping a trading journal, where you really take also down something like, okay, I lost money on this trade. This is the roller coaster of emotions I went through. This is why I lost money. Where didn't I analyze the market correctly? Or maybe I analyzed it correctly. I would take that trade every time again, but the market just chose, to go against me. That is a possibility as well. So, and this is what I meant in the beginning about don't take it personally. Just take it personally, really, if you made a mistake, and then go back and don't do that mistake again. This is part of a learning process, and this is the hardest part.
Yeah, absolutely. I think.
I value now. I value being in a risk-free trade. I would rather be in a risk-free trade, have my stop losses and profit, and make 50% less, than potentially make 100% more, but have no stop loss, and like always I'm always like worrying the whole time, checking my phone the whole time, whether or not I'm in profit, or whether it's the mental health there is something that I did not consider early on. But like after that experience, I realized that the value of risk management and saying stuff, it's not just that you're more profitable, it's that you place yourself in an emotional and mental place where you are less likely to make mistakes, and that in turn keeps you profitable over time. So talking about being risk-free, right? We actually have a giveaway from PrimeXBT, right?
Yeah, today? We do.
What's that giveaway?
We are giving away 10 accounts on PrimeXBT on our trading platform, funded with $200 in Bitcoin each. So a great way, if you want to start your trading career, where you can start without needing to risk your own money, or if you are already a client, you can top up your money a little bit. So 10 times $200 in Bitcoin for your PrimeXBT trading account.
So that's 10 winners, right? So how you enter that, we have a link in the video description of this YouTube video, and the code should be there on your screen there.
It is.
Okay, so take that code, open the Gleam giveaway link, put that code in there, and we'll contact you by email if you win one of those 10 prizes. Right.
Good luck.
I want to comment quickly on. We talked about the fact that everyone will go through losing streaks. Everyone will lose and make mistakes, right? And then you asked, if it's necessary. And obviously, like Dirk is doing some great jobs to, try to prevent people from losing too much. Right, you're not going to be able to prevent people from going through losing streaks, but losing too much. And I guess that's the same thing that we're doing in the Birb Nest, right? You're here to learn, and you're going to lose trades, and we are here to make sure that the losers are not going to be massive, right? Through risk management and that kind of stuff. I remember when I started trading, I opened up a trading account. I had my system, and I back tested it, and it worked. And it was time for forward testing to see if it actually had any profitability. And I remember everything was going well, and then it kind of went bad and bad and bad and bad. And I'm like, oh man, I, lost way too much money. I opened up a new account. I tried to adjust the system. I saw that it went pretty good, and it went good, and then it went bad, right? And I think I did that 4 times, right? And then the 5th time, I have come to a point where I basically had no other choice than to become profitable, right? I was so invested in trading. Even before being a profitable trader, I identified myself as a trader. So losing would mean that I'm failing myself. I'm failing as like a human being was my thought, right? So I just came to the point where losing was not an option anymore. Like, not becoming profitable was not an option. And that was for me when it kind of flipped, when I just had to tell myself, if this doesn't work out this time, I just had to do something else. But that was not an option. So don't you feel like a lot of people have to come to that point where, like, that point of no return, right?
Yeah, I think this is another great example of how different all of us are. You need people that are from the mindset, that need this pressure, that need to be in a situation. It's all in now. If I'm not going to make it now, I don't know what plan B is going to be. I don't know, going to live under the bridge somewhere, or I cannot feed my family anymore, or whatever. That is that point of no return for you. You can be a type of person that needs the situation to really thrive. But on the other hand, you can also be the type of person that needs to approach things more carefully, that maybe needs those 3, 6 months, maybe a year of practice, for example, on a demo account first, where you can try out things, where you find a profitable strategy, and until you're very, very sure, okay, this is really profitable. So both are possible. I tend to be a person like you just said. I also needed this all-in situations, really to to kind of have this click event in my brain when I became profitable. And but I know a lot of traders out there that are extremely profitable as well, that went another way. And this is part of a journey to find out, who am I? What type of person am I? And this is something that, of course, also nobody can take off your shoulders. This is, it's a job where you really learn who you are by the end of the day, without me wanting to sound too philosophically. Sorry.
Yeah, but
maybe
yeah.
Like one thing. Sorry, Crypto Penguin, you said something about stop loss earlier, and this is actually a question we get a lot at the PrimeXBT Training Academy. Is something like, oh, how do I set the perfect stop loss? Do I need to have a stop loss for all positions? And I think maybe this is something we should talk about, that like really could help our viewers out there, maybe. How do you guys handle that? Do you always have a stop? You don't use a stop? I'm like super nosy because there are so many different approaches.
Well, so the way, like, I'm a trend following trader. So the first thing I do is I check what's the trend, what is the market structure, and where's my entry point. So my trade, like the trades that I'm entering, the invalidation level for that trade is also the invalidation level for the trend, right? So if market structure is broken, then I'm out of the trade, right, and trend. So my stop loss is always based on the point where the trend is invalidated, and hence also the trade setup. And I do use the stop loss, but at the beginning when I started trading, I noticed that I got stopped out, and then price reversed in the right direction. It happened all the time. So what I did was I started making notes, and I had a post-it notes, right? And I made notes, and I said, use wider stop loss, right? And I put up another one which says lower it even more. And then I put up a new one which said, if you think you have a good stop loss, lower it. and at the end, I had much lower risk to reward on my trades.
Yeah.
But much more profitable. Much more profitable.
How about you?
I like that. I like that. If you think you have a good stop loss, lower it. I find that as well. As like I used to keep getting like stop hunted, you would say, and then I thought, okay, since I'm consistently getting stop hunted, why don't I just wherever I think is a good stop loss, to go lower than that a little bit every single time, and then that actually improved my stop losses. So I realized that okay, I just kind of like counter trade myself a little bit, then that actually improves my hit rates. So how I do stops is because crypto, I trade mostly crypto. It has a tendency of going up like incredibly violently. So I prefer to trail my stops. And actually have, instead of just having one stop loss, because I realized you don't have to manage your trade like you're gambling. I'm going all in, or I'm not trading at all. You can actually have a stop loss for 10% of your position, and another stop loss for 20% of your position. So I actually have a low risk stop loss, a medium risk stop loss, and like a sane person stop loss, and like a degen stop loss for like maybe like 5-10% or whatever, and then I move those as the price develops, and that's for on exchange if I'm able to set stop losses. For places where I'm not able to set stop losses, like maybe in DeFi, or like maybe I'm on Uniswap, it's not on any place where I can set a stop loss, then that's pure risk management. So I would just put in an amount that I'd be okay if it just goes to zero, which it can happen at any time. Then it doesn't hurt me too much. I can bounce back from it. So it's a different kind of quote unquote stop loss there.
I think very interesting. I mean, we see like two different approaches here also, like especially this aspect of scaling in and out of a position, not only with buying, but also with setting your stop loss. And I think this is really a valid tactic, how you can also conquer a market that is so extremely volatile, like we know from crypto sometimes. I mean, days of 10 or 5 or 10% of price swing in Bitcoin and Ethereum, not to mention other cryptos in the top 20 out there, are very, very common. But nonetheless, I personally think, and I always propagate this in my videos, like almost the last sentence I always say is, remember to use a stop loss. Yeah, you are going to sometimes, that you want to throw your brain at a wall because you got stopped out and, just like you said, and this was exactly the point where the market reversed again into your direction. But again, if you keep note and you look at 1,000 trades, you're going to notice that this is actually not common. It's a rare occurrence. Usually, the stop is going to save your ass.
Yes, of course. I mean, if the question here is should we be using stop loss or not? Well, it's all, of course, like we're going to be using stop loss. If of course, like Crypto Penguin said, we are very different traders. He's a fundamental analysis. He's looking at products and looking more on the longer term scale. So obviously, we have very different techniques when it comes to stop loss placement. And like he said, you're not going to be able to put a stop loss on Uniswap, so you have to position your size in a case, But when it comes to I'm pretty sure he still has an invalidation level, mental invalidation level on Uniswap. When price reaches this level, I'm out. And not having a stop loss means you don't have a plan. And if you don't have a plan, it's going to be impossible to be profitable. You're never going to be profitable without a plan.
Exactly. Yeah. That's like running a business. I don't know, where you sell shoes, and you find this great shoe where you think my clients are going to love this shoe. You put it on display. Nobody wants to buy it. So what are you going to do? Are you going to order more of those shoes? Of course not. Nobody in their right mind would do that. But somehow in trading, especially when we are beginners, we tend to to focus too much on our losing positions, adding to that position in order to hopefully get out of this. And this is usually sooner or later than the point of no return. So like I said in the beginning, have your game plan ready, and you're going to, keep your sanity.
Yeah, one of the major reasons I use stop losses if I can is that crypto is a 24-hour market, right? It's not like maybe a regular stock market where people have like opening times and closing times, and no, that's none of that here in crypto. No. You sleep, you die. That's what. Oh, that was my mindset in 2017.
That's a good one.
The less I slept, I thought the less I slept, the better a trader I would be, because I would be there. If something happened, I could react immediately, and that actually made me worse. So actually, I do use stop losses all the time now.
I remember you said you sleep, you die, and I remember in 2017, I remember waking up in the middle of the night, kind of sweating and like almost being afraid of updating my Blockfolio. Like just watching that, I'm like, holy shit, I'm up like 200%. And last time I checked was 30 minutes ago. And it's like 4 a.m. and I haven't slept for days. It's insane.
And probably now looking back, this is like the last part of a bull market, where things go ballistic. And I don't know if you don't mind the question, did you exit at some point there, or did you write?
No, that was I got baptized in 17, right? Yeah. So that was when it all kind of like when shit hit the fan. In 17, that's when I decided that, all right, it's possible to make life-changing money in this industry. I just need to learn how to trade.
Yeah.
And I then spent 2018 learning to trade, and here we are today. And obviously, I made it all back, but it took a while. Lost a huge amount of money. I remember, I went on to Bittrex and I looked at a list of coins, and I thought, I'm gonna buy whatever's green, whatever's up like more than 30%. I'm just gonna buy that. Okay. And then the next day it was up like 130%. I'm like, all right, that's a good strategy. Then all of a sudden everything was down like 75%. And I'm like, oh, okay, this wasn't that easy.
It's like, and we are seeing the same again. I mean, I read something about some account that bought Shiba Inu. What was it, like 14 months ago for $8,000, which was at one point sitting on $2 billion on profits, which probably is the trade of the best trade in all of human history, to be precise. But let's be realistic here. And I think I did a video about this as well. If you compare now which altcoins were in the top 20 or top 10 4 years ago and where are those coins now, there's hardly any coin there that made a profit for you, a decent profit, in comparison to what Ethereum and Bitcoin did in the last 4 years. So why am I saying this? I think everybody out there, when it comes to trading, long-term investing, should focus on Bitcoin and Ethereum. Because they are.
Yes, you're absolutely right about that, and it feels nice to have somebody very, very experienced say that, and because we have too many people on YouTube, for example, talking about a specific altcoins and saying like, this is the future of crypto, this is the next Bitcoin. Well, then you look at the rest of the market and you see that 99% of the rest of the altcoins are worth nothing, right? And when Bitcoin tops, Bitcoin will dump, but it's nothing compared to what altcoins will do. So, like, you trade altcoins and you invest in Bitcoin and Ethereum. That's my view on this.
I agree, and it's funny. And this was when I first heard about crypto. Also, I was trying to find the next Bitcoin. Exactly, those were my exact words. You quoted me, really. The next Bitcoin, because in my mind I couldn't imagine Bitcoin going from $6,000 to 60,000 or 600 or 6 million or wherever it will go in the future. And obviously, this is not good. And dear audience, I'm going to tell you why. It's because of something an economist would probably call the network effect. The Bitcoin network and the Ethereum network, they have a multitude of higher computational power hash rate than any other altcoin out there. If you compare Bitcoin to the next proof of work coin out there, which I think is Bitcoin Cash, the second strongest, the Bitcoin hash rate is like 30, 40 times higher. And this is a network effect. It's the same effect you saw with Facebook. At one point, Facebook had so many users that there was, if you want to do advertising for your business, no way around. You had to use Facebook. You had to join Facebook. And this is the same we see in Bitcoin. So if you want to invest long-term in an altcoin, always ask yourself the question, is this good? Is it really realistic that this altcoin is going to beat Bitcoin or Ethereum? Am I going to invest in the next Facebook there? 19 out of 20 times the answer to that question is probably no.
Yeah, I think it's really important to also ask yourself, like, what's the underlying trend here? What's the macro, like the primary trend, right? It's the primary trend, and I'm talking about the daily and perhaps the weekly. The weekly might, like we're talking about crypto, so the weekly is not really going to tell you much. So you might be better off looking at the daily for most altcoins, right? They're fairly new market. But like, if you're going to buy something, at least make sure that if it's in an uptrend, make sure to at least start thinking about getting out when you're in a bearish market structure, when everything breaks down. At least consider that. And if it's in a bearish market structure, everything just looks terrible. Like, you have to understand that it can drop 90% more. That bear market can just continue straight down. So I would always try to apply some technicals, like look for a break in market structure before taking that decision. And when holding, like, I know, like I said, Crypto Penguin is usually focused on fundamental analysis, but it's not like, I mean, you're not going to be holding everything just because you like the products, right? You're going to be looking at an extra strategy when crypto market tops, right? It's not like you're going to hold them for 80 years, right?
Yeah. I think a good rule of thumb is, keep in mind, okay, Bitcoin will dump. Bitcoin dumps, but shit coins die, right? So Bitcoin dumps, it'll come back maybe 3, 4, 5 years probably historically, but if you're holding an altcoin, it could just disappear, not be here, delist it, and then what are you going to do, right? So it's a different mentality, different strategy there you need for trading some random altcoins than holding Bitcoin or Ethereum.
Imagine you invested in BitConnect 4 years ago. Was in the top 10.
Yeah.
BitConnect!
Yeah, exactly. Now we are laughing about it, but I'm sure a lot of people really lost a fortune.
Yeah, I remember that. I remember when they rocked everyone. Like, that was, oh man, I remember like seeing the post on Reddit and people, taking loans and stuff like that. Really horrible.
Okay, let's take some questions, I think, before we end the stream, because we're reaching the hour mark here. So
wow, really, already an hour? That's crazy.
One of the questions I think we should might want to discuss, some people have been asking, is do you need to learn TA, or what kind of TA you need to learn to become a trader?
Short answer, yes. Long answer, or longer answer in this case, to a certain extent. You can start, in my opinion, very simple. As I stated before, if you work with daily charts, you look at something like the sentiment, so the current trend or the expectation of a trend sentiment is, and you use support and resistance, and then you can do so very easy by going from the top to the bottom of your daily chart, drawing in lines where it seems like market stalled or found support or stalled at a point of resistance. This is really everything you need in the beginning, especially if you're working maybe a job 9 to 5, and maybe you have like those 20 minutes in the morning, 20 minutes in the evening, where you really can focus on the market. And if you have mastered that, and you'll be surprised, this is really much easier than you anticipated to already be profitable with such a simple strategy out there. And then you can, build up on that, and then you can get into indicators, get into, if you want, machine learning or something like this, which also is a part of technical analysis, in my opinion. So the sky is really the limit, but start out simple. Don't try to learn everything at once.
Yeah, I think you kind of nailed it there. Simplicity is really the key to success here, and horizontal levels, like trade with the trend, horizontal levels. That's really all you need. Like I always say that when I started trading, you looked at market structure, horizontal levels, and then I slowly but surely started adding indicators to confirm that.
Yeah.
Not adding indicators to give me a buy signal, but only to confirm what I already knew. So really, and this is what we talked about during the whole stream, the mindset. So TA, like that's the easy part, but the trading part, the psychological part, that is really the hard part here.
Yeah. The buying is easy. Yeah. What comes after this and what it does to your mind is the difficult part. Absolutely.
Yeah.
Yeah, I like to, people like to think, oh, okay, I have to learn 50, 500 different indicators, master all of them to be a good TA, technical analyst. I mean, just like Dirk said, right? Just some levels, trend lines, start from there. And then if you think, I can't, I'm not a good technical analyst. I mean, look, is this going up or is this going down, right? That's really, if you can do that. If you cannot do that, by the way, then you get some help. But if you can do that, right? Set a line chart. Set your chart to, like, instead of candlesticks, set it to a line, and you can see the lines pointing up. You see the lines pointing down, and from there you can, even if you're not like super precise, at least you'll get a general idea of the trend just from that. Like, like your grandmother can tell you, hey, grandma, is this look like it's going up or it's going down? Anybody can tell you. Your kid can tell you, right? So keep it simple first, and then once you master the simple basics, you can start getting more complicated. So you talked about just now about machine learning. So talking about like machines and stuff, some people have been asking about automation. Do you need it? Should you? Is it effective? Should you get into automation?
It's funny. I saw that question there too, and I thought, like, this would be nice to talk about something like this. Automation is nice. It's something good to have. But as everywhere in life, automation always comes after you've understood what you're doing. If most of you probably out there have a driving license, you're probably automatically driving your car without thinking too much. Oh, I have to switch into second gear, third gear. I need to press on the brakes now. It kind of happens automatically. Why does it happen automatically? Because you understood how to do it. So your subconsciousness just is on automation, does things. And it's the same in trading. When you've identified for yourself a certain trading setup where you say, hey, every time this happens on the market, usually we see a reaction X or Y from the market. Well, then you've reached the point where you can try to automate that. And this, by the way, has nothing to do with machine learning. So this is a step further already. But don't start with automation. Understand what is going on the market first. And once you've internalized it, once you've maybe reached that state, I sometimes dream about the markets. And I dream things like, hey, I have a feeling like tomorrow we are going up in Bitcoin or whatever the market is. I'm trading that at the moment. And very often this becomes true, not because I have a glass ball sitting on my on my desk where I'm the oracle of Berlin, trading the markets. It's because there's something going on in my subconsciousness. And this is something where I can try to automate things. So, in summary, I'm sorry, I have a tendency to monologue a lot. So, start with internalizing things again, and then think about automation.
So the lesson here is that the Oracle of Berlin needs to be an indicator in TradingView. I need that.
I'm going to sell that
based on your dreams. Yeah,
that's a nice name.
I like that. You can't come to the point when you start dreaming about trading. That's really when it kind of ingrained into your personality. I sometimes dream about finding somewhere out there's a wallet which I own, which has hundreds of Bitcoin. So I dream about sometimes finding that that wallet. It's gone. I know it's gone, but it's like that's a dream that's recurring. It's would have been nice to have that.
Well, we have to say then on behalf of everybody that owns Bitcoin, thank you to adding to the deflationary tendencies of Bitcoin by
You're welcome.
sacrificing your wallet.
You're welcome.
Yeah, but
That's not my
I think it's something everybody went through, with Bitcoin at one point or another. But I started mining back then in 2011, by the way. But back then, stupid me thought, oh, this is too complicated. I don't want to spend half hour to figure this out. So I just deinstalled it, everything.
Yeah. I printed a paper wallet. I mined in 11 as well before I really understood it, and I printed a paper wallet, which I then I like it's obviously gone because I've been moving multiple times after that. But it's I went in, I remember I've been up sleepless nights trying to go through everything, trying to find that wallet. I think it took me. It's not until like 3 years ago where I can accept it that all right, the money's gone.
But you're not the dude, a couple of years media was writing about that went to a garbage dump looking for his hard disk every day.
Yeah.
That was not you, right?
No, that was not me. That was not me. Could have been me though. That wasn't.
Okay, I think we're reaching the end of our show now. So just to recap, okay? Maybe Dirk, you can recap for us. So, someone wants to start out trading. What kind of goals should they be setting for themselves? What kind of habits should they be forming so that they develop? This is the important thing. So that they develop the habits of becoming a profitable trader.
First of all, have a game plan ready. Start with the daily charts. Have a game plan. Determine for yourself, this is where I want to enter. This is where I want to exit in profit and in loss. And then execute that plan. So don't, modify after you've entered the position everything again because you think the market has changed or whatever the reason might be. Once you've reached profitability with that. So once you are starting to earn money, and I'm saying starting to earn money means you're earning more than the risk-free money out there. So risk-free for most of the viewers out there is what the bank can offer them at the moment in terms of interest rates, for example, on saving accounts. Then you start building up on this and diverting from this, maybe onto lower time frames, maybe using other instruments of technical analysis or automation. Don't take losses personally. I mean, you've seen all three of us here, all of us three, we have our stories about losing money. We can laugh about this, but believe me, when we had those losses, probably none of us laughed. That would be very strange, but it's part of a game. Losing is part of a game. If you are profitable, and it doesn't matter if you have a hit rate of 50, 70, or just 42%, you've already gone 75% of the way. Also, utilize informations that are out there. The Birb Nest, they deliver on a daily basis such good analysis. They are really one of the good guys out there that really add value for yourself. Come to my channel, come to the PrimeXBT Trading Academy if you are unsure about how things are, and I'm doing my best to summarize things for you to make your life easier. Point.
Great. How do they find that channel on YouTube? Is there a?
Yeah, I don't know. Can we leave a link here? Is that possible during a live stream?
Yeah.
We should be able to write something in the chat and then bring it up so people are going to be able to join.
PX Trading Academy. Yeah. But you'll also find that when you join our Trading Academy Twitter account, which you have to do if you want to win one of those $200 accounts.
So, yes, talking about that, for those of you who maybe joined late or haven't heard about it, so you have a chance to win one of 10 trading accounts on PrimeXBT with $200 of BTC for you to trade with. And of course, you'll need to sign up to PrimeXBT to do that. So if you haven't, thebirbnest.com/PrimeXBT. It's a great place if you like to practice try out different markets like forex, crypto, commodities, whatever. You can trade all those different markets just from that one account. I love that about PrimeXBT. So try that out, and make sure you join us at the. We still have another day of streams left tomorrow, so make sure you join us there for the Trading Congress. Tomorrow we have some private streams you can still access right now with private training, some from Lib, some from me, some from all the traders there. So that's at the website.com/500k. Make sure to share, like, subscribe to our channel as well as the PrimeXBT Academy channel. And also stay tuned to our Twitter and our Discord, because I think I heard a rumor somewhere, I don't know, Libs, that there's might be a Black Friday discount from the Birb Nest. Have you heard about this? I think.
Yeah, I have.
Oh, really?
I have.
Yeah, I have. I think so. Yeah, I think there's something going on. Yeah, and yeah, it's Black Friday, Black Week. Is it Black Week?
I don't know. I don't know how long it's going to be. I don't know much about.
Well, I'm pretty sure it's not Friday today. So it's maybe it's going to last till Black Friday. I remember something like that.
Oh, okay. Well, I guess we'll have to stay tuned and tune in tomorrow to find out, right? Okay.
Yeah.
So thanks everybody for joining us today. Thank you, Dirk, for sharing some of your 20 years of expertise with us.
Oh, my pleasure.
Thank you, Lips. And,
thank you. This has been great. I hope we're able to do more like this one.
Yeah, we could go on for hours. I have a feeling here.
This was
absolutely
I super much enjoyed that. Yeah.
Yeah, I felt like we're a bunch of like drinking buddies just sharing our war stories. Like, oh, I lost so much money. Me too.
Mine is a drink, except coffee. Yeah.
Yeah.
All right. Bye, guys. We'll catch you in the next stream.
Take care.
Right.
Bye-bye.
Take care.